Hey guys, Chris from Adapt Tuition here, and in this video, I'm going to show you the solution for question 7 from the May 2010 PoA Paper 2. If you want to see the solutions for the other questions on this paper, I'm going to put a card up there and a link in the description below, so be sure to check those out as well. And with that said, let's get into the question. Okay, so 7 part A, part 1 and 2 is asking us identify one internal user of accounting information and state how this information is used by that user. And part 2 is asking if you're an external user and how they use the information. So if you remember in my Jan 2011 video, question 7, I think it was, they asked basically the same question, but they asked for 2. So I'm going to give you a couple. For the external users, let's start with external, right? We have the government. They use the information for tax purposes. We also have banks, lenders, or creditors who use the information to assess the credit worthiness of the entity, to assess whether they are worthy of lending money to. That's what they call credit worthiness. Can they repay the loans or the money so borrowed? Then we also have investors, and they want to know how profitable is this entity. They want to assess the profitability to know whether to put more money in or to put any money in or to take their investment out. Now, if you can think of other external users and why they use the financial statements specifically, please feel free to put them in the comment section below so we can add to the body of knowledge that I just put here. Let's take a look at the internal users now. So I just put 2 sets. We have management, and they want to assess performance, and the directors want to do the same thing. You can also put shareholders here, and they want to assess things such as the profitability, liquidity, and dividend payments. Okay, that's, and again, if you know any more internal users and their reasons for wanting to see the financial statements, put them in the comment section below and I'll take a look at it. Let's take a look at part B. Okay, so part B says, identify the type of business organization described in each situation below. All right, so what are they telling us here? The first one is that several employees are employed in a large organization owned by a single person. Well, that's a dead giveaway right there. If it's owned by a single person, that's a sole trader. All right, what about item 2? It says here, 3 brothers operating a business where the action of one brother is binding on the other 2 brothers. That's a perfect description. Well, okay, maybe not perfect, but that is a description of a partnership. Next, we have shareholders cannot sell their shares in the company on the stock market. Well, that's a private limited company. Let's put that here. Number 4, we have a group of consumers or producers form an organization to provide services to its members. Okay, that's a cooperative society or friendly society. There are different names you can use. The last one here says an organization operated by members to provide services to members and is often financed by donations, fundraising, and subscriptions. Right, so that is definitely a non-trading or a non-profit organization or entity. Okay, let's take a look at part C. Okay, so they're telling us here that each of the transactions below violates an accounting concept or principle. State the concept or principle that is being violated. In the first situation, they're telling us that credit sales made in March of 2010 were not recorded until the money was received in May 2010. Well, that's a definite violation of the revenue recognition concept, which says revenue should be recognized when it is earned. The second item, due to the bankruptcy of Mr. Dragon, a debtor, the business is likely to lose $20,000. Sorry, wow. When you miss a zero is a problem. Management refuses to write off this amount as a bad debt or to create a provision. What really going on with management, boy? That's simple, right? As in, the concept is the prudence or conservatism concept. If we know we can reasonably expect that this debt is no longer going to be collected, we cannot reasonably classify it as an asset, and therefore we have to write down or adjust down the carrying amount on the books. Okay, item 3. In order to report higher profits for the financial year, management has changed from the straight line method of depreciation to the reducing balance method. Well, you can't do that just willy-nilly to report higher profits. You are violating the consistency concept and just kind of being misleading. The final item here says Mr. Lumberjack paid the insurance for his private house and recorded it as a business expense. Really, Mr. Lumberjack? You can't do that. That's a violation of the separate entity or business entity concept. Okay, and the last piece they have us doing here is draw a labeled diagram of the 6 stages of the accounting cycle for 7 marks. Okay, so let's take a look So I pulled this diagram from the Jan 2014 POA Paper 2 question 7, part A. So the accounting cycle. So the first thing that you'll have is source documents or transactions occurring, and the transactions of course give rise to the source documents. The next thing to do is to journalize or to put it in the books, the transactions, or record the transactions in the books of original entry. After that, we post the ledgers or T accounts. We use double entry to record the items from the journal in the T accounts. Following that, we extract a trial balance to double check the accuracy of double entry in the ledger. After that, we have our adjusting and closing entries. Adjusting entries are things like accruals and prepayments, provision for bad debts, provision for depreciation. The closing entries are sending revenues, expenses, all those temporary or nominal account balances to the income statement. And of course, finally, preparation of financial statements, and the cycle continues. Hence, it's called a cycle. Okay, so that's it for this question. Okay, guys, so there you have it. That's the solution for question 7 from the May 2010 POA Paper 2. If you have any questions about it, please feel free to leave them in the comment section below, and I'll get back to you when I have a chance. If you want to see any more videos, I'm going to put some cards up here. Don't forget to subscribe, and be sure to check out my website where you'll find some interesting POA handouts. Anyway, guys, as per usual, thank you so much for watching. Take care of yourselves, and I'll see you next time. Bye.